You wake up and promise yourself today will be different. Today, you will follow your rules. Today, you will respect your stop loss. Today, you will not revenge trade. Today, you will act like a professional. And for the first hour, you do. You wait, you analyze, you feel calm. Then the market moves without you. A clean setup, perfect entry. You hesitated. It runs 40 pips without you. Now your chest feels tight. You whisper, "I knew it. I knew it was going to move." And right there, self-sabotage begins. Not because you don't know how to trade, but because you can't accept missing out. So you chase. Late entry, bad price, emotionally forced execution. And within minutes, the market pulls back. Now you're down. Not because the strategy failed, because you abandoned it. You sit back, angry, but not at the market, at yourself. And that's the worst pain. Because deep down, you know you did this. Hours later, you take another trade. This one goes in your favor immediately. Now you're scared. Don't let it turn. Don't let it turn. You close early, small profit. 5 minutes later, it hits full take profit, your original target. You stare at the screen. Silence. You don't feel proud. You feel small. Because again, you didn't trust your own plan. This is the cycle. Hesitate, chase, cut winners, let losers breathe. Break rules, promise to change, repeat. And every night you say, "Tomorrow I'll be disciplined." But tomorrow comes and emotions are louder than logic. Here's the truth no one wants to admit. You are not fighting the market. You are fighting discomfort. Discomfort of missing out. Discomfort of losing. Discomfort of uncertainty. Discomfort of waiting. Trading is not hard because it's complex. It's hard because it forces you to sit still while your mind screams. You want to know why most traders never grow? Because growth requires identity death. The reckless version of you must die. The emotional version of you must lose power. The version of you that needs excitement must disappear, and that feels terrifying. Because who are you without that chaos? Self-sabotage is not weakness, it's protection. Your brain is trying to protect you from pain, but in trading, the protection mechanism destroys performance. You close early to protect profit. You move stop to protect ego. You overtrade to protect pride. You increase lot size to protect identity. Every move feels justified in the moment and destructive in hindsight. The market exposes what you avoid in real life. If you avoid discipline in life, you will avoid it in trading. If you avoid responsibility, you will blame the market. If you avoid patience, you will force entries. Trading amplifies who you already are. There will come a day when you realize something powerful. You don't need a new strategy. You need a new relationship with discomfort. The elite trader doesn't eliminate fear. He executes while afraid. He follows rules while uncomfortable. He waits while bored. He accepts loss without drama. That's the difference. Right now, there are two versions of you. One that reacts, one that executes. One that panics, one that follows the plan. One that needs to be right. One that needs to be consistent. Every trade is a vote for which version survives. And here's the uncomfortable question. When your account grows, do you secretly feel pressure? Pressure to maintain it? Pressure to not lose it? Pressure to prove you deserve it? Sometimes traders sabotage success not because they fear failure, but because they fear responsibility. Growth demands maturity, and maturity is uncomfortable. You say you want to be a 1% trader, but the 1% trader does not seek dopamine, does not seek revenge, does not trade for validation, does not need constant action. He protects capital like oxygen. He respects boredom. He measures execution, not outcome. And most importantly, he trusts himself. Self-sabotage ends the moment you stop negotiating with your impulses. No more, just this once. No more, it looks like it might.
No more, "I'll close early just in case." Rules are rules, or you are gambling. The market doesn't care about your emotions, but your results do. And until you master yourself, you will keep losing to the version of you that reacts instead of executes.
You think discipline is about willpower. It's not. It's about identity. Because willpower runs out the moment pressure rises. Identity does not. When the candle spikes against you, willpower shakes. Identity stays still. When you're down 2 trades in a row, willpower wants revenge. Identity says, stop. Today is not the day. You don't rise to your goals in trading. You fall to your identity. Let's be honest about something. You don't break your rules randomly. There's always a trigger, a loss that bruised your ego, a win that made you feel invincible, a missed setup that made you feel behind, a slow market that made you feel bored. Boredom is more dangerous than volatility because boredom whispers, just take something. And something turns into a forced trade, and a forced trade turns into a loss, and a loss turns into emotional instability, and instability turns into destruction. Self-sabotage is subtle. It doesn't scream. It whispers. Move the stop just a little. Enter half size now, full size later. This one feels different. You deserve to make it back. It always sounds logical, but it is emotional, and emotions are masters of disguise. Have you noticed something strange? When you follow your rules perfectly and lose, it hurts less. But when you break your rules and lose, it feels personal. Because that loss wasn't the market's fault. It was a betrayal of your own standards. And self-betrayal damages confidence more than any drawdown. Confidence in trading is not built by winning. It's built by keeping promises to yourself. Every time you respect your stop, confidence grows. Every time you wait for your setup, confidence grows. Every time you close the platform instead of revenge trading, confidence grows. But every time you negotiate with your plan, you weaken trust in yourself. And without self-trust, execution collapses. Let's talk about ego. Ego wants to be right. Professional traders want to be consistent. Those are 2 different goals. Ego holds losers too long because closing means admitting a mistake. Ego doubles down because it can't be wrong. Ego increases lot size after a win to prove superiority. But consistency doesn't care about being right. It cares about process. The market humbles everyone. The difference is who learns and who reacts. Most traders don't lose because they lack intelligence. They lose because they lack emotional neutrality. Neutrality means a win doesn't inflate you. A loss doesn't define you. A missed trade doesn't chase you. You remain steady, calm, unmoved. That is power. Right now, imagine this. You take 10 trades, all follow your plan perfectly. 6 lose, 4 win. You end slightly positive. Would you feel proud or disappointed because you only won 4? If that question makes you uncomfortable, there's still ego involved. Self-sabotage thrives on short-term emotion. Mastery thrives on long-term vision. The amateur asks, how much did I make today? The professional asks, did I execute flawlessly? That shift alone separates survival from destruction. There is a moment in every trader's journey, a quiet moment, when you realize the market is not attacking you. It is simply reflecting you, your impatience, your fear, your greed, your insecurity. And that realization is painful because you can't blame anyone anymore. Responsibility is heavy, but it is freedom. The moment you accept, I am the reason my results fluctuate, you also accept, I am the solution. And that's powerful. You want obsession? Here it is. The obsession shouldn't be profit. It should be self-mastery.
Obsess over clean execution. Obsess over emotional control. Obsess over consistency. Because when you master yourself, the money becomes a byproduct. Understand this clearly. If you cannot control one click of a mouse, how will you control 6 figures? If you cannot respect a 1% loss, how will you handle a 20% growth month? The market gives you what you're psychologically prepared to sustain, nothing more. Self-sabotage doesn't disappear overnight. It weakens through awareness, through repetition, through painful honesty. Every time you catch yourself about to break a rule and stop, you win a silent battle, and those silent battles build the trader you want to become. There will be days you execute perfectly and still lose. Those days build resilience. There will be days you want to break everything. Those days build character. There will be days you feel unstoppable. Those days test humility. Trading is not a skill test, it's a character test, and character is built under pressure. Ask yourself something difficult. If no one could see your trading account, if there was no validation, no praise, no social media, would you still trade with discipline, or are you performing? That question reveals a lot. The market rewards emotional stability, not intensity, not aggression, not excitement, stability. Calm repetition, controlled risk, boring consistency. That's the secret nobody sells, because boring doesn't go viral, but boring builds wealth. Right now, the version of you reading this is standing at a fork. One path is reaction, impulse, quick dopamine, fast destruction. The other path is slow, disciplined, emotionally uncomfortable, but powerful. Every trade chooses the path, and the truth? You already know what to do. You just don't always do it. That gap between knowledge and execution is where self-sabotage lives. Close that gap, and everything changes.
Because self-sabotage is not just behavior. It's conditioning. You've trained yourself for years to react. React to stress, react to pressure, react to uncertainty. And trading is nothing but uncertainty. So when price moves fast, your nervous system doesn't see opportunity, it sees threat. Heart rate increases, breathing changes, muscles tighten, and you think you're making a logical decision. You're not. You're trying to escape discomfort. That's why some of your worst trades happen fast. Impulse entries, instant regret. Because speed feels like control, but control in trading comes from restraint, not reaction. Let me expose something uncomfortable. Sometimes you sabotage not because you're scared, but because chaos feels familiar. If you grew up solving problems under pressure, if stress feels normal, if calm feels boring, you will unconsciously create volatility in your own trading. Overtrading, overleveraging, breaking rules, because calm consistency feels unnatural. Read that again. Some traders lose because peace feels unfamiliar. Now let's talk about the addiction nobody mentions, dopamine. Every time you enter a trade, your brain gets stimulated. Win or lose, it's excitement. Charts moving, numbers changing, heart racing. It's a casino if you're not careful. And if you trade for stimulation instead of execution, you will always sabotage long-term growth. Professionals don't trade for excitement. They trade for outcome consistency. If trading feels thrilling, your size is probably too big. Here's another hidden form of self-sabotage: perfectionism. You say, I'll start following my plan perfectly next month. Or, I need a better strategy first. Or, I'll size up when I'm fully confident. Perfectionism delays progress. It protects your ego from failing publicly. But growth requires imperfect action with strict rules, not perfect conditions. Now I'm going to say something sharp. You don't lack discipline, you lack standards. Because when something truly matters to you, you don't negotiate. You don't kind of commit. You don't try. You execute.
If your standards for trading behavior are weak, your results will reflect that weakness. Raise the standard. No revenge trading, ever. No moving stops, ever. No random entries, ever. Not sometimes, ever. Identity is built through non-negotiables. Let's flip perspective. Imagine you had to mentor a younger trader and they traded exactly like you do now. Would you be impressed or concerned? That answer tells you everything, because self-awareness without correction is self-deception. There's also something called emotional residue. If you lose a trade at 9 a.m. and you don't reset emotionally, that loss bleeds into 10 a.m. and 11 a.m., and every decision after carries hidden frustration. Elite traders reset fast. Loss happens. They step away, breathe, detach, return neutral. Amateurs carry emotional baggage into the next click, and that baggage compounds damage. Another truth: you sabotage because you want certainty. You move stop loss to avoid being wrong. You close early to secure something. You add to losers because you know it will turn. All attempts to create certainty. But trading rewards those comfortable with uncertainty. You must become comfortable being wrong, comfortable waiting, comfortable missing moves, comfortable doing nothing. That's psychological maturity. Here's the transformation point. The day you stop trying to control the market and start controlling yourself, everything shifts. Because the only variable you ever truly had control over was execution, not outcome. Execution. And execution is behavior, and behavior is identity. You say you want consistency, but consistency is boring repetition. Same risk, same setup criteria, same rules, same patience. No drama, no excitement, just controlled repetition. Can you handle that? Because most traders secretly don't want consistency. They want intensity, and intensity destroys capital. There's a moment in every serious trader's evolution, a quiet one, where you stop asking, "How much can I make?" and start asking, "How clean was my execution?" That's maturity. That's when self-sabotage starts dying, because now your ego isn't fed by profit, it's fed by discipline. Let me challenge you directly. Next time you feel the urge to break a rule, pause and ask, what am I trying to feel right now? Relief? Validation? Control? Excitement? Revenge? Name the emotion, because once you name it, it loses power. Unconscious impulses control you. Conscious awareness weakens them. You don't need motivation, you need structure. You don't need hype, you need boundaries. You don't need confidence, you need consistency. Confidence is earned through repetition of disciplined behavior, not positive thinking. One more hard truth. If you had investor money in your account, would you trade differently? Would you be more cautious, more disciplined, more structured? If the answer is yes, then you're not respecting your own capital, and that mindset alone creates sabotage. Your money deserves professional behavior, even if it's a small account, especially if it's small. This journey to becoming elite is less about charts and more about character, less about entries, more about emotional neutrality, less about signals, more about standards. And the deeper you understand this, the less you blame the market and the more you sharpen yourself. Self-sabotage fades when you stop chasing stimulation, when you stop protecting ego, when you stop negotiating with rules, when you stop trading to feel something, and you start trading like a business operator, calm, measured, neutral, precise. And here's the final layer for now. The market will always test your weakest trait. Impatient, it will move slow. Greedy, it will spike, then reverse. Fearful, it will hit your stop, then run. Ego-driven, it will humble you publicly. It doesn't target you, it reveals you. And until your weakest trait becomes strength, you will keep repeating the same lessons. But once you master yourself, the market becomes quiet. Not because it changed, but because you did.
Because you cannot eliminate self-sabotage by fighting behavior alone. You replace identity. Right now, you have two versions of yourself: the reactive trader and the disciplined operator. The reactive trader trades feelings. The operator trades systems. Every day, one of them wins, and the one that wins most often becomes your identity. The reactive version of you wakes up and checks charts immediately. Heart slightly anxious, mind slightly rushed, already thinking about money. The operator version wakes up calm, no urgency, no attachment, knows there will always be another setup. One is desperate for outcome, one is committed to process. Self-sabotage happens when outcome becomes survival, when profit feels like validation, when a green day feels like worth, when a red day feels like failure. If trading decides how you feel about yourself, you will always trade emotionally. You must emotionally detach your identity from results. You are not your last trade, you are your average behavior. Let me tell you something powerful. The market doesn't destroy weak traders, it exposes them. If you hesitate, it shows hesitation. If you're greedy, it shows greed. If you're impatient, it punishes impatience. It's a mirror, and most people hate mirrors because mirrors don't lie. Now, imagine this scenario. You take a loss. Instead of reacting, you log it, you review it, you rate your execution, you close the platform. No revenge, no frustration, just data. That is psychological dominance, that is emotional maturity, and that is rare. Most traders are chasing control over price. Elite traders control response. That's the entire game, response control. Because price is random short-term, your behavior doesn't have to be. Here's something uncomfortable. Some traders don't want consistency, they want redemption. They want one big trade to erase past pain, one massive win to prove they're capable, 1 month to silence doubt. But trading doesn't reward emotional redemption, it rewards statistical repetition. If you trade to prove something, you will sabotage. If you trade to execute something, you will grow. There's also a hidden enemy called impatience disguised as ambition. You want to scale fast. You want to grow fast. You want financial freedom fast. But speed amplifies emotional instability. You don't scale discipline, you scale mistakes, and bigger mistakes hurt more. Slow growth feels boring, but boring builds foundation, and foundation supports size. Let's talk about fear at a deeper level. The fear isn't losing money, it's losing status in your own mind. It's thinking, what if I'm not cut out for this? So instead of facing slow improvement, you rush, you overtrade, you gamble. Because losing slowly feels like inadequacy, but gambling feels like effort, and effort feels better than patience, even when it destroys you. Now I want you to picture something extreme. You build your account, you grow steadily, you become disciplined. Then one emotional week wipes out months, not because you lacked knowledge, but because you relaxed your standards. That pain is sharper than beginner losses because now you know better. And that is where many traders quit, not at the beginning, but after tasting competence. Self-sabotage at higher levels is more dangerous because the size is bigger. So how do you permanently weaken it? You create friction. Make rule breaking harder. Write rules physically. Print them. Put them in front of you. Limit daily trades. Predefine max loss. When max loss hits, platform closes. Non-negotiable. No internal debate. Debate is where sabotage wins.
Then you build emotional rituals. Before trading, deep breathing, slow analysis, no rush entries. After trading, review, detach, walk away. Train your nervous system to associate trading with calm, not adrenaline, not chaos, calm. And here's something elite traders understand. Your environment shapes your discipline. Messy desk, phone notifications, noise, distractions. These increase impulsivity. Clean space, minimal noise, structured routine. These increase control. You are not weak, you are influenced. Control the environment, reduce temptation. Now, the most important shift. Stop asking, how do I stop sabotaging? Start asking, who would I need to become to not sabotage? Different question, different energy. The answer isn't tactics, it's identity traits. Calm under pressure, patient under boredom, neutral under loss, humble under profit. That's the blueprint. The trader you want to become doesn't negotiate with emotion, doesn't panic under drawdown, doesn't celebrate excessively under wins, executes, logs, improves, repeats. It's not dramatic, it's disciplined. And here is the truth that hits hardest. Nobody is coming to save your account. No new indicator, no new strategy, no mentor, no signal group. If your psychology is unstable, every strategy will collapse in your hands. But if your psychology is strong, even average strategy becomes profitable. Psychology multiplies edge or destroys it. You say you want to be top 1%. Understand this clearly. The top 1% are not special. They are stable, emotionally stable, behaviorally consistent, risk-focused, ego-controlled, and stability is trained, not gifted. There will come a day you take a loss and you feel nothing. No anger, no urgency, no revenge, just acceptance. That day marks evolution, because now the market cannot manipulate you. And when the market cannot manipulate you, you become dangerous in a good way. This is not about money anymore. It's about mastery, about control, about becoming someone who performs under uncertainty. And that skill transfers to life, business, leadership, decision-making. Trading is training your nervous system every day. Right now, ask yourself quietly, am I trading to grow or trading to feel? That one answer will explain everything.
Now we build the disciplined operator. Not emotionally, structurally. Because transformation without structure collapses. First shift. You stop being a trader. You become a risk manager. Read that again. Retail traders focus on entries. Professionals focus on exposure. Before a single trade is placed, the operator already knows maximum daily loss, maximum weekly drawdown, exact percentage risk per trade, maximum number of trades allowed. Not approximately, exactly. When risk is defined, emotion has less room to breathe. Second shift. You eliminate decision fatigue. Most sabotage happens when you are tired of thinking. Too many pairs, too many time frames, too many strategies. The operator reduces variables. One or two instruments, one model, clear conditions. If conditions are not present, no trade. No boredom trading, no curiosity entries. Clarity reduces impulse. Third shift. You build a pre-trade checklist. Not in your head, written. Questions like, is this A+ setup? Is risk fixed and acceptable? Am I emotionally neutral? Am I trading to execute or to recover? If one answer feels unstable, no trade. Simple. Structure replaces motivation. Fourth shift. You measure execution, not profit. After each session, you score yourself. Rule adherence, 1 to 10. Emotional stability, 1 to 10. Patience, 1 to 10. Risk management, 1 to 10. Even if the day is red, if execution score is high, it's a successful day. This rewires your brain to value discipline over outcome. Over time, outcome follows behavior. Now we address the real battlefield, the moment after a loss. This is where identities are chosen. Loss hits, your chest tightens, thought appears, I need to make it back. The reactive trader clicks again. The operator pauses, stands up, walks away for 5 minutes. Breath slows, emotion settles, then decides. Distance kills sabotage, immediate reaction feeds it. Next battlefield, after a big win. This one is more dangerous. Winning creates overconfidence. Overconfidence reduces caution. Reduced caution increases risk. Increased risk amplifies emotion. The operator treats wins like losses. Neutral. Logs it, moves on. No celebration trading. No size increase because of confidence. Consistency beats intensity. Now let's talk about scaling. You don't scale because you feel ready. You scale because data proves readiness. Minimum 3 months of rule adherence. Stable equity curve. Low emotional deviation. Then slight size increase. Not double, slight. If psychology cracks, size reduces again. Scaling is a privilege, not a reward for excitement. Here's a powerful mental upgrade. You detach from single trades completely. 1 trade means nothing. 10 trades mean little. 100 trades reveal truth. You think in series, in probabilities, in data clusters. This kills emotional attachment, because now each trade is just 1 data point, not identity confirmation. Now the most difficult shift. You accept boredom as part of mastery. There will be days with no trades, no movement, no excitement. The reactive mind wants stimulation. The operator respects stillness. Stillness protects capital. Capital creates opportunity. Opportunity builds wealth. Patience compounds. Impulsiveness decays. Let's address something subtle. Comparison. You see other traders posting wins, big days, fast profits, and suddenly your disciplined approach feels slow. Comparison triggers sabotage. You overtrade to keep up. But you don't see their losses. You don't see their risk. You don't see their instability. The operator competes with himself only. Yesterday's execution versus today's. Nothing else matters. Now the identity lock. You define yourself clearly. I am a disciplined risk manager. Not, I hope to be profitable. Identity statements shape behavior. Repeat it. Write it. Act according to it. When tempted to break a rule, ask, would a disciplined risk manager do this? If the answer is no, you stop. Identity filters action. There will still be tough days, days of drawdown, days of doubt. But now, instead of spiraling, you analyze calmly. Was it strategy variance or behavioral deviation? If strategy, continue. If behavior, correct. No drama, no self-attack, just adjustment. That emotional neutrality is elite. Understand this deeply. Self-sabotage fades when self-respect rises. When you respect your capital, respect your rules, respect your long-term vision, you stop acting impulsively, because impulsivity feels beneath you, not tempting. That's evolution. And finally, the day you stop feeling desperate to trade is the day you become dangerous, because now you don't need the market, you choose it. Choice is power. Desperation is weakness. Right now, there's a silent decision happening inside you. You can keep reacting, keep negotiating, keep repeating cycles, or you can build structure, rebuild identity, strengthen emotional control, and become stable.
Now everything comes together. This is where most people either evolve or quit quietly, because the final battle is not strategy, it's ownership. At some point, you must stop saying, the market made me lose,
and start saying, "I violated my edge," or "My edge played out statistically." No blame, no drama, just ownership. Ownership is heavy, but it gives you control, and control is stability. There is a silent moment in every trader's growth. It doesn't look dramatic, no big win, no viral payout, just a normal loss, handled calmly. No revenge, no emotion, no urgency, just acceptance. That's the turning point, because that's the moment you realize you are no longer fragile. Fragile traders react. Stable traders respond. Fragile traders chase. Stable traders wait. Fragile traders need validation. Stable traders need data. Fragile traders are ruled by feelings. Stable traders are guided by structure. The market doesn't decide which one you are. Your behavior does. Let's speak honestly. If you removed the possibility of big money, would you still trade? If the answer is no, then you're trading for fantasy, and fantasy creates sabotage. But if the answer is yes, because you respect the craft, because you value mastery, because you enjoy disciplined execution, then you're building something real, and real things compound. There's something powerful about neutrality. When a win feels normal, when a loss feels normal, when you don't spike emotionally either way. That emotional flatline is not boredom, it's control. And control is what institutions operate on. Calm systems, measured decisions, defined risk, no chaos. Become that. You once thought trading was about finding the perfect setup. Now you realize it's about becoming the right person, because the same strategy in two hands produces different results. In impulsive hands, destruction. In disciplined hands, growth. The strategy didn't change, the identity did. One day you will look back at the overtrading, at the revenge days, at the emotional spirals, and you won't feel shame, you'll feel gratitude. Because those mistakes forced awareness, and awareness built discipline, and discipline built confidence. Real confidence, not loud confidence, quiet confidence. Quiet confidence doesn't boast, it executes. Quiet confidence doesn't panic, it adjusts. Quiet confidence doesn't rush, it waits. When you reach that state, the market loses its emotional grip on you. And when the market can't control your emotions, you stop sabotaging. Understand something crucial. You cannot eliminate emotion. You train response. Fear will appear, greed will whisper, ego will test you. The difference is now you recognize them. And recognition weakens impulse. Impulse thrives in blindness. It dies in awareness. There will still be losses, there will still be drawdowns, there will still be slow months. But now your stability doesn't collapse with them, because your identity is no longer attached to outcome, it's attached to process. And process is controllable, outcome is not. That separation is freedom. And here's the final realization. Trading was never you versus the market. It was you versus your undisciplined self. It was you versus impatience, you versus ego, you versus fear, you versus greed. And every day you choose which side wins, not with words, with behavior. The disciplined operator wakes up calm, trades only when conditions align, respects risk, accepts loss, logs data, closes platform, lives life. No obsession, no emotional roller coaster, just structured repetition. That's the 1%. Not smarter, not luckier, more stable. Now, imagine this version of you 6 months from now. Same strategy, same capital, but no revenge trading, no rule breaking, no emotional spirals, just disciplined execution. Equity curves smoother, mind calmer, confidence earned. That future is not created by motivation, it's created by daily standards. This is where self-sabotage ends, not because emotion disappeared, but because structure overpowered impulse, identity overpowered ego, process overpowered outcome, calm overpowered chaos. And when that shift locks in, you don't just become profitable, you become dangerous in any environment that requires decision-making under uncertainty. Business, investing, leadership, life. Because you trained the one thing most people never control, your response. Now the question is simple. Will you continue reacting or will you operate?
The market will open tomorrow, the opportunity will be there, but the real trade is internal, and that decision is yours.